Hello. Today, we embark on an analytical journey to peer into the true architecture of global finance, a realm where the titans we commonly celebrate, from the most successful entrepreneurs to the largest banking owners, financial pyramid architects, and multinational corporation leaders, are, by comparison, little more than children building sandcastles. The names that dominate popular discourse, figures such as Pablo Escobar, Elon Musk, or Jeff Bezos, represent an insignificant sum in the context of the immense capital we are about to examine. The fundamental, tectonic power of the world economy lies with entities that often prefer to operate outside the glare of celebrity, under names that may seem modest, but conceal a terrifying scale of influence, such as BlackRock. This investment corporation currently commands assets valued at an astonishing $11.5 trillion United States dollars. This number is not a misstatement or a typographical error. It is a genuine representation of $11,500 billion in managed capital, a sum that tests the limits of human comprehension. To truly grasp the sheer, overwhelming scale of this figure, we must resort to stark comparisons, transforming the abstract number into palpable reality. $11.5 trillion represents approximately 1/3 of the entire United States national debt. It is roughly equivalent to the entire American defense budget extended over a period of 14 years, or just under half of the total United States gross domestic product. To put this wealth in human terms, if BlackRock were to be liquidated and its assets distributed equally among every single person currently living on Earth, from newborns to the most ancient citizens, each individual would receive roughly $1,500. The capital base of BlackRock is 4 times greater than the total market capitalization of Apple, one of the world's most valuable companies. Furthermore, this capital is 30 times larger than the personal fortune of the planet's wealthiest individual, Elon Musk. If one were to spend $1 billion every single day, the funds would only be fully depleted after 30 years. If one were to adopt a more modest spending habit, such as a mere $1,000 per day, the money would not run out until the sun itself extinguishes. Even if we aggregate the combined wealth of every single billionaire on the planet, the total amounts to $16 trillion. BlackRock alone controls 11.5 of those trillions. It is a sum for which no common colloquial descriptor exists, no slang term to capture the essence of a trillion, marking it as a practically infinite amount of money from any functional, practical perspective. This colossal concentration of capital naturally raises fundamental questions about its origins, its purpose, and whether it harbors a deliberate ambition for global dominance. The acquisition of global strategic assets serves as a clear illustration of how this financial gravity translates into geopolitical influence. Not long ago, BlackRock secured a crucial new asset: 2 strategic ports situated on opposite sides of the Panama Canal. This purchase immediately granted the corporation effective control over a key artery for global maritime transport, one of the most critical shipping routes on the entire planet. The decision to execute this transaction was, by all accounts, openly political. Reports suggested that then, President Donald Trump expressed strong dissatisfaction with the heightened activity of Chinese entities around the canal. In a geopolitical chess move, BlackRock simply purchased the ports from the Hong Kong company that had previously held ownership. The price tag for this critical infrastructure was approximately $23 billion, a sum that, by the standards of BlackRock, is considered trivial, mere pocket change, hardly enough to justify a second thought. In a single, almost dismissive transaction, BlackRock also acquired controlling stakes in 43 other ports located across 23 different countries from the same Hong Kong seller. For the corporation, this was not a celebrated, massive financial victory or a strategic triumph. It was simply a routine day's work. The sheer pace of this accumulation suggests that, in the time it takes to absorb this analysis, BlackRock will likely have acquired yet another asset, perhaps a piece of land, a major business, a critical technology, a powerful politician, or even an entire sovereign state. Officially, the corporation is insistent that these assets do not belong to it, but are merely under its management on behalf of numerous investors. Formally, this fiduciary duty is accurate. However, the practical reality of this structure is fundamentally different. The shares held by individual retail investors are highly impersonal and entirely diluted across the vast range of businesses managed by BlackRock. No individual client is ever consulted on how to vote in the board of directors meetings for a behemoth like Apple, Pepsi-Cola, or the defense corporation Lockheed Martin. Investors transfer their capital in trust, and while BlackRock faithfully pays out the expected dividends, the immense, almost monstrous financial and political influence derived from controlling $11 trillion remains solely with the corporation itself. This influence is not shared. The mention of these specific companies is deliberate. BlackRock holds significant, substantial though not outright controlling stakes in all three. For instance, its 6.7% stake in Apple is the second largest shareholding in the company, with the largest typically belonging to the closely related index fund, Vanguard. This dominance is achieved through the formal mechanism of the index fund. Index funds, which emerged in the 1970s, operate on a deceptively simple premise. Instead of concentrating investment risk in a single asset, one should invest across the entire market to neutralize dependence on the volatile fluctuations of individual stocks. The fund pools client funds and diversifies the portfolio as widely as possible, essentially betting on every single horse in the race and then, for good measure, buying the racetrack itself. The consequence is a straightforward, market-mirroring growth. If the overall market grows by 5%, the fund grows by 5%. Together with Vanguard and State Street, BlackRock constitutes the so-called Big Three, which collectively owns a substantial and ever-increasing portion of the global economy. Analyzing the corporate web of the Big Three reveals an unprecedented concentration of ownership. BlackRock alone holds, on average, a 5% stake in 95% of the companies listed in the Standard & Poor's 500 index, which is the list of the 500 most expensive and powerful corporations in the United States. This means that out of 500 companies, BlackRock has a presence in approximately 475 of them. This systemic presence cuts across every industrial sector, technology, and internet. They hold a 7.3% stake in Microsoft, 7% in Alphabet, the parent company of Google, 6% in Amazon, and 7.5% in Meta. Healthcare and pharmaceuticals. Their influence extends to major players like the insurance giant United Healthcare and the pharmaceutical behemoth Pfizer, a key producer of coronavirus disease 2019 vaccines. They also maintain stakes in consumer health and hygiene corporations like Johnson & Johnson and Procter & Gamble, finance, energy, and communications. They are deeply embedded in major financial institutions such as Bank of America and J.P. Morgan Chase. Energy companies, both traditional, Chevron, ExxonMobil, and green, Tesla, and communication infrastructure companies like Cisco Systems and Broadcom. Consumer goods and media. They own slices of payment systems, Visa, MasterCard, soft drink rivals, Coca-Cola, Pepsi-Cola, entertainment empires, the Walt Disney Company, Netflix, retailers, Walmart, Home Depot, and major media conglomerates, Fox, Comcast. The inescapable reality is that the average person, anywhere in the world, not just in the United States, cannot avoid interacting with BlackRock. Whether one is using a telephone, watching a television program, purchasing shampoo or soda, or using a payment card, they are engaging with a company in which BlackRock has a significant ownership stake. Even ordering delivery through Google at home constitutes an interaction with BlackRock. The illusion of market competition is shattered when one examines the top shareholders of direct rivals. The largest shareholders of Pepsi-Cola are BlackRock, Vanguard, and State Street, and the largest shareholders of Coca-Cola are, astonishingly, the very same three companies. The question naturally arises: how can two competing brands engage in genuine market competition when they are controlled by the exact same group of principals? The public face of this immense financial power is its founder, ideologue, and chief executive officer, Larry Fink. Born in California in 1952, Fink's early life followed a trajectory common to Wall Street's rising stars. After receiving a strong education, he secured a position at the First Boston Investment Bank in New York, where he quickly ascended to become a Wall Street celebrity. His pioneering experiments with complex mortgage-backed products were instrumental in growing the bank's assets to $1 billion. The narrative of success was dramatically interrupted in 1986 when Fink incorrectly predicted market movements and, in a single instance, lost $100 million of his employer's capital. This catastrophic loss transformed him from a star to an outcast, forcing him to leave the bank. Fink himself frequently recounts this period, emphasizing that this failure was the powerful motivation that led him to establish BlackRock with an initial, foundational obsession with risk management and low-risk strategies. What followed, however, remains a peculiar narrative point. Despite having just been responsible for a massive financial loss, Fink was immediately invited by Stephen Schwarzman, a leader from the famous bank Lehman Brothers and founder of the Blackstone Group, and his partner, Peter Peterson, a former United States Secretary of Commerce and also a Lehman Brothers employee, to lead a new index fund within their corporation. This fund was christened BlackRock, founded by Fink and 7 of his former colleagues and associates. The fund's initial growth was nothing short of brilliant, quickly accumulating $50 billion in assets under management within a few years. Yet, inexplicably, in 1994, the Blackstone Group sold off BlackRock for a mere $240 million, a move that Schwarzman would later call a heroic mistake. Fink bought the fund back in 1999 and immediately took it public, with its shares today trading at 60 times the initial public offering price. The subsequent growth curve was parabolic. $190 billion in the year 2000, $350 billion in 2004, and breaking the $1 trillion barrier in 2006, following the acquisition of the investment bank, Merrill Lynch. By 2021, the assets under management had soared to $10 trillion. Larry Fink attributes this extraordinary, almost magical growth to a proprietary computer system. Long before the widespread integration of neural networks, BlackRock had been developing its own continuous computer system for market analysis and trading since the late 1980 seconds. This system bears the evocative, almost mythical name, ALADDIN, an acronym standing for Asset, Liability, Debt, and Derivative Investment Network. ALADDIN is not a single server, but a vast network of several thousand computers housed within a heavily guarded data center. While it performs trades, its critical function lies in its unparalleled ability to evaluate risk, factoring in everything from political instability and regulatory changes to even weather patterns. It draws upon massive repositories of data, including scientific research, statistical databases, legal assets, and satellite imagery, all underpinned by highly complex mathematics and continuously refined, deeply classified software. Fink proactively replaced human traders with mathematicians and programmers, leveraging artificial intelligence long before the concept became mainstream. Critically, BlackRock sells access to ALADDIN to other institutional clients, meaning the system now manages assets totaling over $20 trillion, an amount that virtually equates to the entire United States gross domestic product. The scenario is straight out of a work of fiction, where a supercomputer is constructed with the capacity to hack and control the entire global capitalist system. For the skeptical observer, the existence of such an omniscient system also offers a convenient, almost impenetrable shield. When faced with questions about the success of their decisions, or their near-total avoidance of financial losses, BlackRock has the perfect retort. The magical computer told us to do it. All questions about their unerring success can simply be deferred to the inscrutable logic of ALADDIN, a system that, being a machine, cannot be interrogated. This technological advantage is coupled with what amounts to a second, more political secret weapon, an exceedingly close, almost familial relationship with the American government and the leadership of the Federal Reserve System. While BlackRock employs a massive team of lobbyists and generously funds political campaigns across both major parties, a more impactful phenomenon is the revolving door that moves high-ranking officials between the public sector and the corporation. Dozens of former senior civil servants have been hired by Fink, including, famously, former British Chancellor of the Exchequer George Osborne, who was paid £650,000 for working just 1 day a week. Conversely, former BlackRock personnel routinely move into key government positions, including the Federal Reserve System and the Securities and Exchange Commission, the very agency responsible for overseeing the securities market. The ultimate proof of this symbiotic relationship occurred during the 2008 financial crisis, The United States government directly asked BlackRock to help manage the fallout. BlackRock was tasked with saving the bank Bear Stearns, and it is widely believed that the Aladdin system was utilized to determine which assets were salvageable and which had to be allowed to fail. Bear Stearns was subsequently sold to J.P. Morgan Chase, while the bank that BlackRock was not involved with, Lehman Brothers, collapsed. Subsequently, Fink assisted the government in disposing of several $100 billion worth of toxic assets. Since then, BlackRock has served as a governmental consultant for jurisdictions across the globe, including the United States, the European Union, Switzerland, Canada, and Greece. In a powerful sign of deference, when the Federal Reserve System invested $750 billion in securities in 2020, BlackRock was appointed to manage the entire acquisition process. While the corporation vehemently denies any possibility of insider trading or conflict of interest, swearing a Great Wall of China exists between its advisory and investment divisions, the concentration of power and information remains unprecedented. The corporation's role in the American housing market is another critical area of analysis and controversy. BlackRock is not merely involved in complex financial instruments. It is actively and aggressively purchasing residential real estate and land across the United States, Spain, and Italy. This practice has been explicitly criticized by public figures such as Robert Kennedy, who stated that BlackRock is systematically pricing ordinary American families out of the possibility of home ownership. Ordinary citizens simply cannot outbid the offers made by a corporation with virtually infinite capital. The purchased properties are often either rented out or deliberately kept empty, further exacerbating housing shortages and driving up prices. The ability to own a home is a central pillar of the American dream, and its systematic erosion has led to widespread public resentment against the corporation. This behavior has, in turn, fueled more radical conspiracy theories, connecting the mass purchase of property to the notion of the Great Reset, a supposed global elite plan to deprive the population of all private property, fulfilling the idea that you will own nothing and you will be happy. Adding to the complexity of its global profile is BlackRock's contradictory stance on environmental, social, and governance investing. Larry Fink publicly declared that BlackRock representatives would actively vote against management teams that failed to adequately align with the so-called woke agenda. This policy instantly generated strong backlash. Conservatives denounced it as the imposition of gender inclusivity, deindustrialization, and green energy initiatives, while progressives were equally critical because the corporation simultaneously maintains massive investments in sectors that contradict these values. The fund invests billions in companies supporting border security, including those that build fencing, manage detention centers, and provide surveillance for undocumented immigrants. It maintains large stakes in traditional, non-ecological businesses, such as oil, heavy industry, and defense. Furthermore, it has systematically invested in businesses that engage in the clear-cutting of the Amazon rainforest and other ancient forests globally, from Canada to the island of Borneo. The ultimate geopolitical contradiction arose with investments into the People's Liberation Army of the People's Republic of China. BlackRock invested several $billions through Chinese exchanges into 14 Chinese companies with explicit links to the Chinese military. This list included not only manufacturers of satellite and communication equipment, but also corporations linked to the country's nuclear program, and those directly involved in the program, notorious re-education camps for the Uyghur population entities that are sanctioned in the United States. This meant that the pension savings of American citizens were being invested into the Chinese defense industry. The scandal was so severe that it provoked a rare public rebuke from George Soros, who advised Fink to cease investing in repressive regimes. Faced with overwhelming criticism, Larry Fink officially announced a retreat from woke capitalism this year. This decision immediately triggered a swift, widespread, and dramatic reversal across corporate America, with other members of the Big Three following suit, resulting in the sudden slashing of diversity budgets and the mass termination of diversity personnel, suggesting these social stances were merely tactical, ephemeral strategies. The corporation's position on cryptocurrency also demonstrates a willingness to pivot dramatically in the face of opportunity. After initially dismissing cryptocurrency as being useful only for drug trafficking and money laundering, Larry Fink entirely reversed his position. BlackRock is now a major crypto investor, controlling nearly 600,000 Bitcoin and heavily investing in cryptocurrency exchanges and mining infrastructure. This aggressive accumulation has led to speculation among some that Fink harbors ambitions to execute a 51% attack on the blockchain, granting him complete control over the network if he were to secure 51% of the mining power. Others attribute market movements, such as the crash of the Terra cryptocurrency, directly to targeted manipulation by the fund. The final and perhaps most profound element of this power structure is the corporation's pervasive control over the media landscape, which shapes public discourse and narratives. BlackRock holds controlling stakes in virtually every major American media outlet. A 12% stake in Fox Channel, a 16% stake in CBS, a 12% stake in cable news network, CNN, and a 12% stake in the Walt Disney Company, which owns the American Broadcasting Company channel. Furthermore, they own a share of a corporation that controls 250 daily newspapers across the United States, including the widely read USA Today. Their 10% stake in the Sinclair Company extends their influence to 72% of American regional television. This vast network ensures that the fund not only shapes the global economy, but also heavily influences the information consumed by the citizens of the world. In conclusion, the combined power of the big three BlackRock, Vanguard, and State Street is unparalleled. Their aggregated assets equal the total United States gross domestic product. Their intertwined ownership creates a self-referential structure where competition is an illusion, and the levers of power are consolidated into a handful of boardrooms. This degree of wealth concentration creates its own gravitational field, bending the surrounding reality through the sheer force of its existence, and attracting yet more capital. This situation is historically reminiscent of the British East India Company, an entity that began as a commercial venture, but accumulated so much political and military power that it became virtually indistinguishable from the state itself. When three enormous, interconnected, and largely depersonalized companies own everything, and their decisions are sometimes attributed to a seemingly magical supercomputer named Aladdin, the fundamental question must be asked: is this still a market economy, or is it something entirely new? The power is so absolute that it has become essentially invisible in daily life, only truly manifesting in the limited choices available to the consumer and the distorted reality of the financial world. For now, BlackRock restricts its maximal influence to the financial domain, but the potential for the total control over the direction of human life remains the ultimate lingering concern. Thank you for watching. We'd love to hear your thoughts. Tell us in the comments what surprised you the most in this video, or what you found the most fascinating. If you enjoyed this video, be sure to leave a like and subscribe to the channel. Many more thrilling, shocking, and mind-blowing stories are coming soon.